Hello and welcome to Mintax. Today we are going to be talking about what to do if you get a notice from the IRS regarding a balance due, also known as a CP14 notice. You will probably have a moment of panic. Don't worry. This is absolutely normal. In this video, we will discuss what a CP14 notice means, what your options are to address it, and how to move forward without stress. Before we get started, please take a moment to like this video and subscribe to this channel. We produce content to help you grow your wealth with no stress, and your subscription helps us out a lot. I'm personally an AI avatar, but the words I'm reading have been written and carefully scripted by enrolled agents, CPAs, and financial gurus at Mintax, Inc. Great! So let's get started. First, we will describe what a CP14 notice is. Second, we will address why you may have received one. Then, we will discuss what happens if you don't address the notice you received. And finally, we will talk about how to proceed after receiving a CP14 notice. So what is a CP14 notice? CP14 notices are typically mailed out in groups throughout the year, but they only address a specific tax period. For instance, if you are a calendar year taxpayer, the CP14 notice will refer to one tax period from January 1st of one year to December 31st of the same year. This is why you may receive multiple CP14 notices at once if the IRS has determined you owe a balance over multiple tax periods. There are a number of reasons why you may have received a CP14 notice. For one, you may simply not have paid all of your taxes due just yet. This is particularly common if you have a side hustle or if you deal with cryptocurrencies. Another reason you may have received one is that your employer did not perform adequate withholding from your paycheck. This may occur if your employer never received a W-4 from you, or if your filing status recently changed without updating your W-4. Inadequate withholding is a very common situation when a child ceases to be a dependent after a divorce, or any similar situation that changes your filing status to single, married filing separately, or head of household. Another reason is that a previous client or employer may have cleaned up their books and realized they needed to adjust their own tax returns, including payments to workers. If the IRS is notified that you received more income than was previously reported, they will recalculate the amount you owe and notify you via a CP14 notice. The key takeaway is that anybody can receive a CP14, and it doesn't necessarily mean you made a mistake. However, it is important to not ignore it and to remedy it as soon as possible. Your first instinct when receiving any letter may be to ignore it. However, a CP14 notice should never belong on your recycle later pile. The IRS has a number of tools to collect what they believe you owe them, and leaving a CP14 notice unaddressed will never result in the IRS simply forgetting about it. At first, the IRS will send you reminders by mail. Unless you are unlucky, or the IRS suspects you may be trying to commit fraud, they will typically assume you didn't receive the notice and send a reminder or two. However, that does not mean they will always keep assuming the same. If you are consistent in ignoring CP14 notices, the IRS will attempt a few different methods to collect. They may attempt to garnish your wages, apply a lien on your property, or sell your debt to a third-party collector. Once your wages are being garnished, it is extremely difficult to remedy the situation, as it involves coordinating with multiple departments and levels of taxation. Liens on your property are also a challenging situation to remedy. A lien may interfere with your ability to sell your property or dispose of it in any way, among other consequences. Finally, the IRS may opt to assign your debt to a third-party collector. This may ding your credit score and affect your ability to open credit cards, secure rentals, find new employment, among other consequences. Finally, the most feared option the IRS has at its disposal is to pursue legal recourses to address unpaid debt. Although their reasoning behind whom they choose to prosecute is not explicit, the IRS may opt for legal repercussions as a result of unpaid taxes. Famously, this was the way the IRS took down Al Capone, and is generally used against taxpayers the IRS suspects of fraud or other illegal conduct. This all sounds scary, but you can take action to prevent any of these events from escalating. In the next section, we will address how you can take action and clear whatever unpaid balance the IRS thinks you have. Your first option is to review your wage and income transcript. These are available on your IRS portal, along with transcripts of any filed tax returns. If you notice anything suspicious, such as income you did not earn, or a tax return you did not file, you may be a victim of identity fraud. Please reach out to us at Mintax using our email, questions@mintax.us, and we will be happy to help. The easiest way to resolve the balance owed is to simply pay the balance due. You can do so either by mailing a check to the IRS or by using an online payment platform. Sometimes, the balance due is not money you have available to pay within the time frame given by the IRS. Although this is scary, it is possible to apply for a payment plan online or by using IRS Form 9465. While it is not guaranteed the IRS will accept your payment plan, it is a common way to help taxpayers settle balances with the IRS. Keep in mind that, depending on the amount you owe, different payment periods and application methods are available to you. The easiest way to apply is online if you owe less than $25,000. Between $25,000 and $50,000, you may need to file a paper form in order to apply. If you wish to set up a payment plan for more than $50,000, you will need to file Form 9465 in paper, and to file Form F-433, the Collection Information Statement. This form reports your assets, debts, and living expenses to the Treasury Department in conjunction with your application for a payment plan. Finally, you have the option to challenge the balance requested. This can be done in a number of ways. OICs, also known as offers in compromise, acknowledge the fact that the taxpayer is unable to meet the balance demanded by the IRS within any reasonable time frame, and offers a reduced sum as settlement for the debt. While this is an option, it should be advised that the IRS may verify the information given alongside an OIC in order to ensure that it is genuine, and may resort to other methods to collect the balance due. A taxpayer is also usually able to file an amendment to the tax return the IRS is addressing in its CP14 notice to adjust the amount owed, if the new information the IRS has received affect the tax return that was previously submitted. Finally, a taxpayer is always able to challenge the IRS's determination of a balance owed. While this is an available recourse, it does require moving further up the authoritative hierarchy of tax law. A taxpayer is allowed to represent themselves, or they may enlist the services of an enrolled agent or CPA to represent them before the IRS. We hope this video has been informative. To recap, a CP14 notice is a simple but non-trivial matter that must be addressed to settle an outstanding balance to the IRS. Failure to do so may result in a number of unpleasant consequences. We hope that this information proves useful to you, and please review the links in the description of this video to determine which approach is right for you. Mintax is always available to help if you have any questions or need clarification on any of the information we discussed here. Send us an email at questions@mintax.us, and please don't forget to subscribe to this channel for more great tips on growing your wealth. See you again soon.